22nd of January. It's a Thursday in the year 2015. My name is Wayne McDonald. I'm the Chief FX Market Strategist for TradersWay.com. This is your daily Forex Trader Strategy session. Today it's all about the ECB. We've been talking about this for weeks. Today is the day that the ECB is supposed to announce quantitative easing. Interest rate decision will be made public in about 9 minutes, and at 8:30 the press conference starts. Plenty to talk about. Yeah, I think we should focus on the euro today. What do you guys think? Let's talk about this briefly. Draghi's about a year late on the quantitative easing, and I'm being generous. Okay, but it's a long road coming. He had to get additional powers and change his mandate at the ECB. Had politics to worry about, et cetera, et cetera. So that's why it took so long. Plus, the ECB, they're slow as molasses on a cold Georgia morning anyways. And I've learned that the ECB has a capability of disappointing me beyond belief. So even when I'm prepared to be disappointed by the ECB, they still disappoint me. So, that being said, widely expected, the ECB is going to announce quantitative easing. Yay! Well, did you know about that? 500 billion is the number on the table. It's also widely believed if he announces 500 billion, it's not nearly enough. So the market's already disappointed, assuming he's going to act. And he probably will act. It probably will be the 500 billion. But like I said, going back many, many, many years, the ECB, almost without fail, disappoints. So it'd be interesting if he comes out and he's like, yeah, I'm thinking about quantitative easing. And everyone's like, really? That's unlikely. I think he's going to announce, but okay, a couple of things. It's already been priced in, the 500 billion. Great. Wouldn't it be nice if he said €1 trillion? Probably unlikely as well. So what's going to move the market? I'm hoping they say, yeah, look, it's 500 billion. This is QE infinity. It's 500 billion with, with maybe, with no end in sight. If we run out of 500 billion, we'll do another 500 billion. If that's not enough, we'll do another 500 billion. And it's really the attitude more than anything. Remember when Draghi says, we'll do whatever it takes to support the euro? And it was a wink, wink, nudge, nudge to the market saying that there's an implied guarantee by the ECB to cover Greek bonds. Remember all of that? That was one of the reasons why the euro became overvalued. Because suddenly every hedge fund on the planet was buying Greek bonds paying 10 or 12%, and they needed euro to do that, so they bought euro to buy the Greek bonds, which had a implied wink, wink, nudge, nudge guarantee by the ECB, because Draghi simply said, we'll do whatever it takes. So I'm hoping we have a we'll do whatever it takes moment today with the ECB. And if so, the euro should weaken dramatically, because he'll say, look, we got, negative interest rates in Switzerland, negative interest rates in Europe. We're going to drive this sucker down. You better get your money out of the euro, because that weakening of the euro will create the inflation that they need, so on and so forth. Maybe it'll spur the economy. Maybe you'll go on vacation at Euro Disney, right? Maybe you'll buy some Beamers. Who knows? Maybe it's all right. Go on that Greek vacation you've been holding back on. Because they need to do something. Did you guys see the Spanish unemployment came out today? Yeah, only 23.5%. What? Wow, huh? Something's got to happen today. So the implied one. The other thing that would be interesting today that the ECB could do is they can come out and basically give a much higher than expected inflation target. You know, instead of saying, hey, you know, we'd really like to see, you know, inflation somewhere between 1% and 2%, wouldn't it be great if they said, look, we're going to do quantitative easing until we see 3% inflation? Wouldn't that be great? Because then it says, look, pedal to the metal, we're going to do this and it's going to be a long time. Interest rates are going to be negative in Europe for a long time. We're going to print money like there's no tomorrow. We're going to do whatever it takes. Yeah, that's what I mean. So that's an implied more than 500 billion, right? And that's what I think we need today. I don't think we'll get it, but we could. And that would be good, I think, that the euro should drop. About 3 minutes now to the official announcement of interest rates. Okay? I don't think the interest rate one will be the big market mover, but we'll come back later. And how do you guys feel about me sticking around and we do the press conference together? Just maybe like the first 15 or 20 minutes. What do you think? Sounds good? Have you opened a live account with Traders Way to thank them for these strategy sessions? We're trying to earn your loyalty by providing education and, you know, and support. Good. Well, thank you. Good. All right. So I think we should focus on the euro dollar. You should start your day with support and resistance. Did you guys enjoy yesterday's planning session where you guys picked the bias? And I went through and I did all the train plans based on your strategy. I did all the tactical plans. Cool. Now, yesterday we went through and I created, I think it was like nine trade plans based on dollar strength. Did you notice all 9 were winners today? Some of them moved 200 pips each. Hey, you're welcome. How nice is that, huh? So, but today, you know, again, this is an event risk. Here we go. We're just, I guess, did it come out? No change. Yeah, everything unchanged. No statement yet. Okay. Be careful. Now, a scalper would have scalped already off the retracement. Pretty basic fib retracement strategy. Okay, there's some orders near the cycle level. Remember, this isn't the event. Okay, this isn't the event. Just be careful. Now, are you a bull or a bear, right? Remind yourself. Do you remember? Yeah, remember? I've had this here for about 9 months, maybe more. What is your job if you're a bear? Sell at resistance. Sell rallies. Where's your resistance lines? Okay, stay calm, keep trading. But we're using this here as topside resistance. I don't find this particularly good trading conditions. So just be careful. Okay, let the announcement come out. Remember, a lot of the numbers are already priced in, so I don't think we can be surprised. Maybe we will be. I think there's some room for disappointment. I don't know how they would do it. I mean, the big disappointment today is at the press conference at the bottom of the hour. They just come out and say, yeah, we're not going to do it yet. And if they do that, the euro could get really strong. Okay? I'm hoping they come out and say, yeah, we're going to do it. And, you know, we're going to stick to it. We're not a one-hit wonder kind of thing. So we'll see. Looks like the market's calming down. Be careful. Events like this, you know, you face additional risk, like slippage, for example. If you have variable gaps, or variable spreads, your spread could widen. You got to be careful. There's extra risk associated with trading under these types of conditions. And as a trader that, you know, that has been here every day for 10 or 12 years, you know, these high risk events are really unnecessary to your trading career. Okay, if you're going to take them, just remember there's higher risk associated with it. The market could get jumpy. Like I said, there could be slippage and spread widening and all these other different risks that you don't typically face on a normal everyday kind of trade. So if you're going to do it, okay, make sure you're at the highest resistance or the lowest support. Okay, don't be the monkey in the middle. All right, because this could just go up and down, and you know you get slaughtered like a pig. Okay, so be a bull, be a bear. Okay, trade the extremes, stay out of the middle. So what you could do is wait a few minutes, let the market calm down, and trade off of support or off of resistance. If it's not support, don't trade it. If it's not resistance, don't trade it. Okay. Now, I think the bigger event of the day is going to be the press conference. Draghi is going to read a statement, and then he's going to take Q&A. Okay, it's somewhere in that statement, you know, it's going to go like this, da, 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 and then it's going to go whoa, whoa, boo, 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 boo. But without so much volatility up and down, because he'll say something like, we'll do whatever it takes, and then all of a sudden the euro would just crash straight down, 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 and you have a trend exposed, and you would trade in the direction of the move. You know what I mean? So you catch some micro pullbacks and stuff like that. Probably too fast to use oscillators. So just like you know, just a little price action, it goes up and then go boom, and then a little price action, boom, you know, boom, and you're just selling lower highs, right? But after sort of the the clue that we're looking for is announced, then you get a steady move in the direction. Or if Draghi says it's 500 billion and there's not a penny, that would be disappointing. Euro gets strong, right? Because we've already priced in the 500 billion. And nobody thinks the 500 billion is going to save the Eurozone. So if that's it, we'll forget about it, right? And if the euro goes up, that creates more deflation. Do you guys understand that concept? Purchasing power. If the value of your currency is rising, you don't need very much of your currency to buy things. That means prices in those terms, prices are low because the purchasing power of your currency is so high. Okay? So that would be counterproductive to the euro. Do you see US dollar weakening across the board? No. This has nothing to do with the dollar in this case. I wouldn't think so. Dollar happens to be weak right now. It's just people, protecting themselves from risk. So that was a comment I wanted to make. On days like this, you might want to try a binary. So you guys have traders, accounts at Traders Way. You should connect your binary option platform that Traders Way offers you. And the interesting part about binary is your costs are fixed, right? So you don't have like a variable spread going on. And there's no volatility tied to it because, price, like now, like we're dropped like what is this, 30 pips, and then rose 60 and then dropped 30, right? So we did this whole round trip. Do you think it's possible that some stops were triggered here and some stops were triggered here, and yet nothing's happened? Right? It's possible, right? For short-term traders and stuff? Well, with a binary option, none of that would matter. Right? So like, let's say you're a bear. We've already identified this. We, in fact, did this yesterday. This orange line is price action resistance on the euro. So it's a place you could sell. It's a sell zone, as they say in Italy, right? A sell zone. That's your sell zone. So you could drop a binary here, right? And just say euro's going to be less than that in an hour. And what if the European Central Bank disappoints? Euro dollar skyrockets 250 pips. Doesn't cost you any more than the cost of the option itself. So it jumps up 250 pips. You're wrong. The scope of your wrongness, the scope of the disappointment that the ECB gave us is irrelevant. So if you had a cash position and it jumped 250 pips, and let's say you're trading one mini, you'd be down $250, right? If you used a binary and let's say you drop 25 bucks, then you're wrong. You lose 25 bucks, not 250, right? But you're in it without the volatility associated to it, right? Now you might not have as much upside, but hey, you're in the trade without volatility, without slippage, without spreads widening and all that kind of stuff. Well, it's not that bad, right? Now, I prefer to use a binary to hedge. Okay, I think that's the best way as a Forex trader to use binaries. And I've taught that in several of the past strategy sessions that we've had together. But sometimes it's great to help with. I wouldn't want to do it like that all the time, but high volatility times, right? Use it as your event-driven strategy. Or, you know, if you're range bound, sometimes it's fun. You know, you scalp off the top, scalp off the bottom, trade between support and resistance. And again, no slippage, all that kind of stuff. So there's a time for everything. Now, obviously, one of the great benefits of being at Trader's Way is that these binary options get played out on your Forex platform. Shows up, new trades show up here. So that's cool, right? So there's a time for everything. Is this a trade that you might want to be in for, you know, 3 years? Well, you know what? That might be a trade you make later today or tomorrow, but maybe it's time for scalping. Now, wouldn't you be afraid if you were scalping just using your spot account? You throw down a trade and the thing just pop 100 pips. Isn't that against you? Does that worry you more than, or are you trying to catch the 100 pips? What do you guys, are you in it so that it jumps and you make 100 pips really quickly? Or are you worried that you could lose 100 pips really quickly? So yeah, so to me, I'm much more worried about the risk. I get cautious when somebody tells me how to make a lot of money quickly. I'm like, what? See, as a professional trader, I can tell you that your reward is associated with risk. If you want to make a lot of money really quickly, you got to take on a ton of risk. And it comes down to a form of Russian roulette, right? Hey, if you don't kill yourself, you'll end up getting rich. Well, I don't like those odds, right? I don't like that kind of game. And, you know, so I look for ways to reduce risk. When market conditions are unusually risky, I tend to get conservative. And with an understanding of fundamental analysis and the skill of technical analysis, you know, the calm, everyday, regular markets are the ones that make me happiest. When trading is essentially boring, you know you're doing everything right. Because in the long run, the odds are in your favor if your analysis is correct. How do you know your analysis is correct? Well, you analyze it. And then you make adjustments, and then you analyze those results and make adjustments. So it's not get rich quick, it's blood, sweat, and tears for years. But you actually have a skill. So again, yesterday we analyzed 9 different currency pairs. Well, I think a couple of them were commodities, right? But they all hit. Some of them by a couple of 100 pips in a boring, regular, you know, day market. So anyways, today is not boring and it's not a regular day. So that means there's more risk associated today. So I tend to get conservative. This thing could pop one way or the other, and that frightens me because that's additional risk, right? So again, it doesn't mean you don't trade today, but you do things to mitigate the risk. And one of the things is, instead of maybe trading a spot cash trade, right? Instead of the cash market, maybe we do the derivative, the throw down an option. Are you guys open-minded to trying something new so that you give yourself an opportunity to win, but you protect yourself from downside risk? You guys okay with that? So how many people have never tried a binary on their Trader's Way account? Just completely new. I mean, it's a huge upside for being with Trader's Way. Huge. I love it. It's just unbelievably awesome. So it's a nice benefit to have, is all I'm suggesting, and this might be a good time to use it. So the best way to use a binary, I guess we can go into that while we wait, because the press conference isn't until 8:30. Okay. But at least we can talk about it until then. Okay. How far away is your stop typically when you trade, guys? There's a lot of people in the room, so I'd like to see quite a few answers so I can get a survey. When you trade, when you place a trade in, like a shorter term trade, $50, $25, $5 to $10, $50, $30, $100 pips. Yeah, not on a swing trade, YJ. Yeah, 15 to 50, 30 to 50. Frank doesn't use stops. My gosh, Frankie. We'll work on that another day. I care about you, Frank, so we'll put that in the parking lot. Maybe we'll revisit that. Yeah. My gosh. All right, so 30 to 50. So let's say you trade a mini lot and 30 to 50. So what are we going to make this? 40? 40 pips is a typical stop. Let's say somewhere between 30 and 50. 40 sounds all right. All right, so it's a spot trade, 40 pips stop. Okay, it's not quite a 1-to-1, but it's pretty close. By the time you add, like if you were in a spot trade, remember you have to pay for your spread and stuff like that, right? So it's basically a 1-to-1 trade if you take out the spread, right? So it's not a huge winning trade, okay? I think you would need to have spot trades in the market, because the most important thing for a professional trader is to let your winners run. Okay? You understand that? I'm first and foremost a cash trader, because I can let the winners run forever. Right? 300 pips, 400 pips, 1,000 pips, if I can get them. Hey, 300 pips here, 300 pips there, pretty soon it adds up to real money, right? So I'd like to let the winners run. You can't do that with a binary. Also, the cash market pays you an interest rate. Well, that's a nice thing to have, right? But in some cases, the binary is better. In this case, in a high volatility, event-driven type trade, it might be appropriate. Or if you're in a higher risk, so like I think a couple of weeks ago, we discussed how to get into a trade where you think it's bullish long term, but still technically bearish, right? When your fundamentals and your technicals don't align, but you like the opportunity, but technically it's still quite aggressive, well, then you would use a binary to hedge. So you would long the cash and short the future, because if you get it right, you can be long-term long cash plus picking up the yield differential, right? Getting paid interest. Meanwhile, you're reducing your downside risk by using the binary. And it cuts your risk by like 40%. So it's a smart way of doing it, right? Well, in this case, what we're thinking about is just scalping. Okay, so how about this? You tell me now, is the euro going to be or in this case, Euro USD. Is the Euro USD going to be lower in an hour or higher in an hour? Okay, people say lower. Okay. So if you shorted, what you could do is you can use your technical analysis. Okay, so you zoom in, find your support and resistance levels. Okay, we know we have one kind of up here, right? And then the top of this was a midpoint psych level, right? So we're kind of in the zone. We're below the weekly central. So what you would do is you would wait for this to get to what you would see as resistance. So you're still using your MT4 charts. You're doing your analysis. You're risking the same amount dollar-wise. So like if you had a 40 pip stop trading minis, it's $40, right? So you can say, all right, well, we're kind of where you think, you know, resistance is going to be. This option expires at the top of the hour. Okay, 40 pip stop loss. Okay, you following me? And all you have to do now is wait for price to touch your resistance level, and you could say lower or higher in an hour. Okay, this Euro USD is a cash chart. So here's the secret weapon that Traders Way offers you. So you have Euro USD cash, but you have Euro USD BO, binary option. So you can have your chart set up this way. Let me clean that up. Boop. Boop. Look, it's exactly the same. Wow, isn't that special? Okay. So anyway, so you're doing your analysis, and you say, oh, this is resistance, and this is resistance, and this is resistance, and the news is going to come out, and it's going to go up and down and down and up and up and down and down and up. Fine. So watch this. Your stops, right? You're risking $40, which would be the same as 40 pips on a mini, and you want it to sell. Right? There it is. See the trade? Right there on my MT4 account. How nice is that? Bring up my terminal. There it is. Sold Euro USD. Right? I'm short. Now, what happens? So my stop is like, it's not really a stop because considered a binary, because if the option expires above that price, how much do I lose? Well, the cost of the binary. It's like getting stopped out with a 40 pip stop. Okay? But if it goes up 150 pips, I still only lose the 40. So it's like a built-in stop. But here's the interesting thing. If Euro USD jumps 100 pips, if I was in the cash market, I would get knocked out and lose 40. And then it does this. Boom. Right? Comes all the way down and makes a lower low. In the cash, you would have lost. Even though you were short, it spiked up, knocked you out, and then dropped like a ton of bricks. We've all been there. It's happened before, right? Well, in the binary, you would still win. Okay. Now, for scalping, I was mentioning, it can also be good. The binary might be a better way too. So for example, let's say you have a range like this, and you sold off resistance, right? And it drops, and then your next one, you buy it, support, and it rises. What if it hesitates like this? And at expiration, you're here. You get the full return. So with a binary, you need to be right or wrong by 1 pip. That's why it's interesting for the scalp, right? If you, excuse me, simply used technical analysis, you found hardcore support or resistance and traded, you know, you only have to be right 1 pip. So you could, you know, essentially have a strategy based on finding hardcore support and resistance, multiple levels of pivots and psych levels, and combine your long-term technicals with your long-term fundamentals, and you put it all together, and you just have really, really solid resistance or really, really, really solid support. The quote-unquote sure thing. Well, that might be an opportunity there because you only have to be right 1 pip. But again, the downside is you can't let it run. So you could use it, therefore, to hedge your cash position. Okay. Nuno asks, can you place the binary trade directly from the MT4? No, you can't. But I can close it. Okay. Now, what if you wanted to bail on the trade? What if you change your mind? Okay, here's the trade here. So I can show you, for example, you can bring up the chart and everything, very nice. Right? But let's say I change my mind. I'm like, I've made a terrible mistake. Right? See? I can get out right now. Okay? I could bail early and not lose as much. Also, I can bail early if it's profitable and I'm just too nervous, I'm chewing my fingernails or whatever reason, I can get out early and have a smaller profit, but get out early nonetheless, which is really nice. Can you hedge binary? Well, you could be long and short, I guess. I've never tried it. So options typically should be used to hedge a cash position, right? In this, right? You typically you would be long cash, short, in this case, short the option. So again, I think the most intelligent way, besides scalping when the market's choppy, the next, or even more important than that, is when you're making a long-term trade. Again, long-term, let's say you're long-term bullish, but the market is still technically bearish. The binary is best for hedging that first trade into the new direction. Okay, so again, let's say you're looking at the Japanese yen pairs, and the market's been doing this down, down, but you want to be long. So you get to a psych level, you know, and you're like, I want to buy this, and I think, you know, in a year or in a month, we're going to be way up here. So how do you get into the market when it's still technically bearish, but you think on the longer run it's going to be much more bullish? Well, you long the cash and then you drop a binary. So if it drops farther, you get paid, will cover almost half of your losses in the cash market. Think about it, guys. You're getting into a long-term good trade based on your technical and analysis and your fundamental analysis, right? And you're taking a good logical shot in the direction you want to be. Okay? You're smart enough to use a binary to cut your risk almost in half. My goodness. Wouldn't that be what a professional trader does? Instead of just gambling and guessing, like, right? Oh, I think it'll go long. No, no, no. It's all about risk, guys, and how to mitigate your risk. Right? Forex isn't for degenerate gamblers. And binaries are not gambling. They shouldn't be used that way. So what you want to use is a mix of cash and, in this case, option. Sometimes the option is a better way to go when there's lots of volatility. And you say, you know what, I'm just going to scalp today, and at least I can sleep at night knowing that if I'm way wrong or this market just freaks out because Draghi does something unbelievably stupid. And by the way, it's possible, isn't it? Right after the Swiss franc debacle. It's possible. It's a real risk, right? And in the cash market, if things go wrong, you can get hurt. Draghi could burn you. So maybe on a day like this, you say, you know what? I'm worried about that risk. So today's the day I'm going to try the binary instead of the cash. Because if it's way wrong and this thing jumps 1,000 pips, I know it sounds stupid, but that Swiss franc dropped 4,000 pips. So now it's not that stupid anymore. I mean, it's redonkulous, right? So maybe on a day like this, we bust out the binaries, and if things go horribly wrong, doesn't bother us. We're not going to be hurt. We're not even exposed to that risk, but we have an opportunity to put some, you know, pennies in our pockets for the trouble. Doesn't that sound like smart money? Yeah. So I'm just saying there's a time and place for everything. I wouldn't trade binaries exclusive. But I think they complement each other. And I love how I can manage my binaries in my MT4 account. Lufle till you home. Okay? So that's the binary in there just below the weekly central. Okay, if we had a stop, so we're at 25, so, you know, 65, our stop would be about here. It's not bad, right? Because we got the weekly above us. We got the roll reversal stuff above us that we looked at a couple of days ago. We got a midpoint psych level, and maybe, just maybe, we squeeze in this daily R1, right? There's a lot of resistance up there. But do you think it's possible that we do this today up to 17 and then back down? So like he comes out, it's 500 billion, and the market says that's not enough. So Euro skyrockets. And then in the press conference, he comes around and says, yeah, it's 500 billion, you know, we'll do whatever it takes. And the thing drops. How many people think that's very reasonable to happen? The market is very disappointed on the headline, right? On the speech, they're very disappointed, but during the Q&A, he backs it up, and now everybody's happy. How many people think that that's very reasonably possible? That the euro jumps 100 pips and then turns around and drops 100 pips? Yeah, Rick's like it happened in May, right? Yeah. Frank says unscrupulous brokers might even be doing it on knock out all the stops. Everybody get, right? But whatever. So wouldn't it be nice to have the opportunity, but would not even care about that? And that's, again, the benefit of having a binary option. We're only 8.5 minutes away now. Okay? So this isn't a big rah-rah speech about binary options. It's a big rah-rah speech about how to recognize risk, how to manage your risk, stay calm, stay focused, have a plan, make the adjustments, and survive to trade another day, right? It's all about living to trade another day. I use an analogy in my book, since there's a military theme to it. Right? What's the #1 goal of every soldier? To not get killed. Sometimes it may be your only goal. Right? So on a day like this should be your key focus. Are you prepared to lose 20% of your account today? I'm not. Doesn't sound good to me. So, but that's my focus right off the bat. Not to make a bunch of money, to not get myself killed. Then the next goal is to achieve the mission. For me, in the beginning, it was, you know, focus on being the type of trader that I wanted to be. That was my mission. To focus on like the characteristics of what a perfect trader would have. A patient, disciplined trader that kept a journal and reviewed his trades and made adjustments and had to focus every week and a plan and all these things. And it was a lot of work, but I figured those are the characteristics of what a successful trader would have. And since I didn't have a mentor, I would just try to do those things. Essentially, I would just fake it. My goal was just keep faking it by doing all the things a successful trader would have. And I would keep doing it every day until I forgot that I was faking it. I was just doing those things habitually. Did you guys ever read Market Wizards? Really? Never heard of it. My gosh. Probably one of the best-selling series of books on trading ever. There's a great, I can't remember which trader it was, but he's being interviewed for the book and he's a bit reluctant, right? Because, you know, a lot of successful traders just kind of like to be quietly successful, right? Well, look it up, Wyatt. Look it up, right? So, anyways, so this guy's being interviewed about being a market wizard, and he says, "All right, look, I'll do your interview, but you only have an hour, and while you're interviewing me, I'm going to be doing my homework." And Jack Schwager says, "Well, what do you mean?" He's like, "Every single day, I end my day by reviewing all the markets, reviewing all their positions, reviewing all their strategies, revising the strategies, and putting everything down, the entire plan, in on my spreadsheets and stuff. And I do it without fail every single day. So the next morning when I come in to work, it's all done. Everything's planned out. It's all there." And he says, "I've been doing it for years and years and years, and it's the one thing that keeps me successful over and over again, because I do the homework and I have a plan." Like, I don't even care about the rest of the interview, right? So are you that tenacious, right? Well, that's what I was focusing on. And then, of course, the last thing that the last part of the military analogy was, you know, the first one was not get yourself killed. The other one was achieve the mission. And the last one is, you know, every soldier has to focus on winning the war. Everything they're doing should lead to winning the war. And of course, that's accomplish the mission, accomplish the mission, accomplish the mission over and over and over and over again. But winning the war obviously is peace. But for a trader is, you know, to have the skills and the discipline that you've developed, and having a successful Forex career and enjoying what you do and finding, you know, peace and happiness as a trader. That's truly, you know, to me, winning the war. And having that independence and having that confidence based on, you know, hard work and analysis and all that. Okay, I'm gonna move out to the full market. Okay. So we're about 2.5 minutes away from the beginning of the press conference. So it starts out where Draghi reads a written statement. That's probably where he's going to disappoint. They're going to say 500 billion. They're going to say that's not enough. And then the Q&A comes out, and perhaps that's where he comes in and says, yeah, we understand 500 billion is not enough, and we have a plan for that. That's all that matters. Because after that's all speculation. Well, what's the plan? What's the plan? Is it more? Is it going to be 1 trillion? You know, blah, 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 blah. It doesn't matter. It's like, what did it mean when Draghi said he'd do whatever it takes to support the euro? What does that mean? Who cares what it means? You know, it's something. Okay, we're now testing 116. As you can see on the Euro USD, we're short just underneath that weekly central. So you see how it dropped, pulled back, we shorted, and it dropped like a ton of bricks. You're welcome.
Vice President and I are very pleased to welcome.
Can you hear okay?
You to our press conference. Any issue Olauskas, the chairman of the board of Lietuvos Bankas, became a member of the governing council on January 1st, 2015. The accession, the
Great.
details on this rotation system are available.
Their feed is so unbelievably slow. I have very fast internet.
On the outcome of today's meeting of the governing council, which was end of the monetary stimulus achieved. As a result, the governing council took the following decisions. First, it decided to launch
All right, we've got some movement here.
There, euro softer as Draghi announces the size again, but bigger than yesterday's press speculation.
Okay, bigger number.
And that the policy will be conducted until they see a sustained adjustment to the path of inflation.
Yeah.
The euro continues to sell off there, 115.20 being approached. Again, not providing any timeline or constraint on the timeline there that there will be seen into the adjustment in the path of inflation. We have seen the euro sell off here as Draghi lays out the initial details of QE. Equity futures catching a bid. The S&P minis and Nasdaq 100 futures rallying along with European European stock markets. And Draghi saying they'll burst the sovereign bond purchases on the ECB's capital key. That was one of the options mentioned over the course of the month. Basing the sovereign bond purchases on the ECB's capital key. This is the proportion of their contributions to the central bank. Just note that some additional criteria to apply where the IMF programs, the Troika programs are implemented. They'll change the litro terms. They're changing the targeted litro terms as well.
By the way, this is brought to you by TradeTheNews.com.
On the day 1295. The ECB changing the pricing on the targeted litro program. You just note that the future targeted litro operations will be equal to the rate on the main refi rate prevailing at the time the litro is conducted. Seeing the euro off its best levels here, 115.40, 45 area, still off about 0.6%.
So we shorted at 16.25 and it dropped to 15.25.
Program features, and that the ECB will coordinate purchases. And we're seeing the peripheral bond yields move lower. Italy, Spain, Portugal, all seeing buying across the sovereign bond.
Notice support is daily S1, weekly M2. Support pivots.
And ECB, they'll implement the program decentrally.
Not 115.00, 115.14, which is exactly a weekly pivot.
Draghi saying that the rest of the national central bank access purchases will not be subject to loss sharing, that the rest of the national central bank asset purchases will not be subject to loss sharing.
What do you think of the trade, guys? Do you like it?
Some of these purchases by the national central bank subject to loss sharing, some not.
Okay, remember it just has to be 1 pip below that dotted line.
And Draghi now just giving the rationale for the formal launch of QE of the adverse developments in the Eurozone.
Whoa, just like that, huh? So that just moved 100 pips. In less than 5 minutes, down 100 pips, up 100 pips. What do you think, guys? It's risky, isn't it? No, I think it's dangerous.
explain the rationale with the inflation outlook as well as the slack in the economy, the basis for launching QE.
You think people got stopped out on that move? It jumped 85 pips in 2 minutes.
The euro has got a big figure off the earlier low.
Well, at least we didn't face undue risk.
Just reiterating the forward guidance that interest rates are at their lower bound.
Okay, we're at a big pivot cluster on Euro USD. You can see yesterday's low, 15 midpoint psych level, daily pivot, weekly pivot, and then below that the next psych level. This is why it's getting choppy in here. Okay. So they're doing 60 billion a month. To put that into perspective, when the Swiss National Bank was supporting the 120 area, buying 30 billion a month. So this is twice as big as the Swiss peg before they dropped it. It's probably why the Swissies had to get out of it, right? Because they would be, you imagine the Swiss National Bank buying 30 billion worth of euro and then the ECB selling 60 billion. But anyways, so 60 billion.
Commenting on the decline in oil prices, reiterate the viewpoint that we've seen throughout Europe from other officials that have been economic stimulus
And
in the region.
in typical ECB fashion, they announce it today, but they're not even going to start till March. I never understood that. They seem to always do that. Like, yeah, here's our announcement, but we're not going to do it for 2 or 3 months. Like, what? Why not like start today?
Trying to reiterate the viewpoint that the risks on the economy are to the downside. Major DCB remarks.
Okay, volatility is stabilizing near the pivot clusters.
Here are roughly 160 area and the chopping the big figure range here as the QE's formally announced and we get the details.
So the good thing here, is it's basically indefinitely. So that's good. I mean, that was, so he announced a little bit more QE than expected, and he's he's not giving it a deadline. You know, there's no upside number, so it could be 600 billion. It could be a trillion. Who knows? They'll just keep doing it. 60 bill a month. Okay, caught on the midpoint psych level. Remember in this template, I got a lot of lines. The red lines are midpoint psych levels. The blue line is yesterday's low. These 2 green lines are support pivots. So, you know, support, 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 support. So, excuse me, losing my voice. Was this a valuable lesson on how to trade during extreme volatility? Did you guys enjoy the event-driven strategy, which gets reward with much less risk than other market participants? Yeah. Why it says binaries are nice. Yeah, they're nice. Again, I wouldn't use it as my only tool. I like the cash market much more than binary, but I think you can be smart about it. Like anything else, like, you should have multiple strategies for multiple market conditions and opportunities. For a high volatility market, some upside reward for, reasonable amount of risk. For range-bound markets, you might be able to use it to scalp. And then, of course, if you're making long-term investments, like a carry trade, then it's good to hedge your cash positions and lower some of your risk. Right? So it's appropriate for various, for various strategies, and I thought it was appropriate today. Again, what you might not have seen during this price action is that depending on your broker, your spreads could have widened significantly. So for maybe 10 seconds, the spread on the Euro USD like 12 pips, 20 pips. Who knows? It can happen. And you're like, well, what's the big deal if you're already in it? Well, if you're already in it and the spread widens, it could trigger your stop if your stop's not that far away. So if you're down 10 pips, but your spread widens 20 and your stop is 30 pips away, you got stopped out. And you're like, I didn't even touch my stop. Yeah, but your spread widened. So it can happen depending on, the broker and the type of account. Right? So on and so forth. It's not just the volatility, but it's an additional level of risk, and I think you should account for it in your trading strategies, especially if you want to trade Forex as a career, as a long-term career. So let me ask you something as we get to the top of the hour. If I was to do special training someday, what topic would you like me to cover if I just did like a special 1-hour training event? What topic would you like me to cover? Swing trading? Sure. Let me know how I can help. Hedging? Psychology? Fundamentals? Okay. What's on your mind, guys? Talk to me. How can I help you? Support and resistance? Front running, market open? Well, yeah, we did that yesterday, Anthony, right? But yeah. Discipline? Yeah. Um, If you didn't catch yesterday's lesson, watch the video on tradersway.com where we went through and created 9 successful trade plans. And I think, of the plans, I think they moved 100 to 200 pips each. I think the USC CAD was up almost 300. Front running London, that's a good one. Fractal geometry. Yeah, Rob, fractal geometry is usually the sort of the capstone of the education, where you learn everything and then you have to put together a 3-dimensional puzzle. Yeah. So my option expires in just a few minutes here. Was it 3.5? It's probably less than 3.5. 13:51. What? That can't be right. My clock says 57. Yeah. Must be on European time, right? A little slow. There it is. 7. Here's my trade. So in a couple of minutes, if it closes below this dotted line, I get paid 73.2. Okay. So it's like picking up 73 pips, right? How does that feel for an hour's worth of work? Now, of course, you could have put 100 lots and made like $730,000. It's all the same. So it's not a bad way to scalp, right? Picked up 73 pips, didn't have volatility to worry about. We sold at resistance just below the weak central pivot point about 10 minutes before news, when volume and volatility was low, when spreads were low, but I didn't even face the spread risk. Should be any second now. You can see the position on the MT4 chart as well. Boom. So we sold at 1508 and at 1600 got her 75 pips. Cool, huh? So, peace on earth. May the pips be with you. May your profits be above average. Okay, the trade just closed. Did you see that? Woohoo! Neat. Well, thank you for sharing with me today. I was thinking about maybe we should do something special, just you and me and I, you, me, and us. Together forever, right? So peace on earth. May the pips be with you. May your profits be above average. And I'll see you on Monday, 7:30 in the morning, New York time, London lunch, tradersway.com. Cheers.